just like that, that 2-day losing streak is in the books. We are now like a number 1 seed, playing a number 16 seed, except for Virginia, of course. The stock market the bull rally is back in force and back in play and exerting its dominance. We're going to take a look at it again tonight from a technical standpoint to see, if and when we'll ever get any kind of pullback and how deep or big or it will ever be. If we get one. I did see a tweet today that said the markets won't pull back because of I didn't dig into the headlines. I can't actually remember why. I don't like it whenever I see those kinds of tweets, especially when they're serious. There wasn't even a joking tweet. So we're going to talk about that. We're also going to talk about a trade idea in a strong sector that really is kind of helping fuel this advance. So let's go ahead and get started. Today is Thursday, March 21st, 2019. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off looking at the market forecast on the S&P 500. Came 2/3 of the way to a cluster with today's strong rally to the upside. So remember how we were, that's not very much of a bearish pullback here, and you can see more than recovered in one day today. Brought the near-term line back up into the upper half of the chart. Now not too far, and we're already up to a higher high, so we haven't cleared that divergence yet, and we need to get a new high on this blue line. We're not quite there yet. We still have a strong bullish posture. We have a rising long-term market sentiment, so the trend is still bullish, right? Dark green line, dark green shading maintains. It started late. That's not the typical start to one. Typically it starts together, or at least as close to together as possible. So that, this was a little delayed, and again, like I said before, we probably should have had a pullback here that would have brought us back down and then got us to start something like that. The intermediate line probably would have dipped a little bit below, and but we didn't, right? We continued higher, and we're continuing higher right now without the exhale. The inhale continues. Yes, this was not an exhale. Yes, it was 5 days in a row, but it was very, very shallow relative to the rally we've had going into it. Not as shallow as these, but this kind of shows that none of this has been enough of a exhale to really build a low point off of that we can extend higher. So this is basically all one big rally from 2346 now up 500 plus points in pretty much one fell swoop. That's brought, the intermediate line's gotten up here and had one brief dip of a bearish weakness, but that was it. Not even enough to bring it below 50, which would have been a low point like this that you can build off of, which is what we were expecting probably in this little area right here. But we continue higher, and if we continue higher towards 2900, that's where kind of your next layer of volume resistance is, and we're kind of marching our way towards that thanks to the reaction to yesterday's FOMC decision, at least release, that's been out there. Dow Jones Industrial Average bounced up again, had a good day today. The near-term line did not get above, and the intermediate line's not up above 80, so it's still lagging thanks to Boeing. But it was a bullish intermediate. Well, the short-term sentiment was set up for a bullish bounce, and so far it has. Not to the extent that the S&P. And remember, the S&P is well up above all these highs, and up above the last 2 days' highs, which the Dow's not either. So keep that in mind. Not as bullish of a bounce. The Nasdaq Composite's what's leading this way, especially the Nasdaq 100. Almost a cluster with all four lines coming off of pretty much a cluster, or really close to a cluster right there, with all four lines to the downside, and just one move to get all four lines back up to the upside is unbelievably rare to go from one to the next. Usually you get, it's harder to get the market sentiment to get right back, to go from oversold, which it did just barely, dip to 20.2 as the lowest point it got to, and then get all the way up to, not quite up above 80 yet, but 79. Like very, very rare. And you can see, of course, the Russell 2000 also, it had a good day today. If you take a look at it here, it was one of your better performers today relative to the market. You can see a little bit of outperformance, but also did not get above the last 2 days' highs, and obviously not close to those highs yet. So you still got some lagging performance. You know, it did turn back to bullish, but it's oscillating here. It's not really, it's got to kind of clear up above this level to be back to bullish again. And like the Dow, the near-term line bounced, but not to the upper half of the chart yet, right? So we'll see if we get follow through from today's action in the rest of these. So, but the trend is still bullish. We're back up above a rising moving average. You're back to a dark green shading. So you got tomorrow that line will be green again, and you've got dark green shading again. So that's the combination. It's a good bullish combination, just not as bullish as what we see like in the Nasdaq or in the S&P 500. And you can see the Dow, same thing. Bullish combination, dark green line, dark green shading, but still not eclipsing those highs or anywhere close to these all-time highs, or at least last year's highs. See, this is even lower. The Russell is even lower because it had dropped so much. It's been harder for it to recover. All right, before we look at some other charts, subscribe to our YouTube channel. Click that or mouse over this logo right here in the bottom right corner of your screen. Click the red subscribe button. You can also click the red subscribe button down below the video for those who don't see the logo. Click the thumbs up icon that's down below the video too. That tells me, number one, you got something out of the video today. Number two, that you want us to do it again tomorrow. YouTube really likes engagement. That's why we push it every video. So if you know, again, even the thumbs downs are actually really good for us because they're engagement, and that's what YouTube doesn't really care too much about, the thumbs up and thumbs downs, as much as the fact that you clicked on one of them. So we really encourage you, if you want us to kind of like I said, it shows us that you want us to keep doing these videos day after day. Comment down below too on anything that stood out to you. I'd like to look at those comments to see what it is that you what you're getting out of these videos, or anything interesting that stood out to you. Join our daily market outlook email list. Click that link that's popping out up there in the top right corner of your screen. Very easy way to join our email list. Multiple watch lists that get sent out every day in those, so make sure you're signed up to that to get those, as well as a time-stamped summary of this video. So it's a really easy way for you to jump to the spots that you want to hear by clicking on the links that are in that email. You can follow me on Twitter for more content like this in between videos from day to day, and then join our daily market outlook, or join our market outlook community, excuse me, that we've created on Facebook. Also, click on these three things here. Click on this heart. That will take you to your Twitter account. You can like tonight's market outlook tweet. Click on that like button. Also, click on this image. Takes you to your Facebook page where you can like today's Market Outlook Facebook post and be able to share it there with your friends. Then finally click on this like button. Again, those three things, engagement, right, especially across these social networks, also lets them know that you want them to keep pushing you our stuff, to make sure you know when we're putting stuff out there. I put some charts out there today, for example. Remember our calendar over here on the right of upcoming classes, and then right above the video is a link to our forums, specifically to the Market Outlook forum here on our website. You can see another link to it up here at the top. You have to subscribe to our site to do that, but you can do that for free. You can be able to engage with other market scholars on anything we talk about in these videos from day to day. All right, now let's get back to the charts. Look at a long-term view. You got that nice crossover that we're continuing to get. We've nullified the one down week that we've had during this rise, more than nullified that. We're back up. We've got the 15-200 day crossing, golden cross, continuing all higher. We're well up above now that 200-day moving average. Hakinyashi, you can see a nice good bullish candle this week with these transitions did not lead to a downturn yet, at least. One interesting thing on the if you go back to the market forecast, here we go, back to the market forecast chart and look at the weekly chart for that instead, and let's take the drawings off for a second. You notice that here we do have the dark green shading, but we don't have the dark green line, and we still won't even after this week. The moving average is still falling here on the long-term chart. So you can see the same thing applies. You get that combination of dark green line, dark green shading together, at least the good bullish trends. Last time we got the dark green shading without the dark green line was back here in between these death crosses that we got on the 15-200 day moving average. So that's a similar pattern to what we're seeing so far right now. So that's something to keep an eye on in terms of how much longer, you know, again, kind of looking at that Hakinyashi, We didn't get that transition. Similar, we didn't get the transition back to the upside here after these transition candles following a decline. We had 3 more weeks of declines before another transition that led to the upside. Well, we're going to get another 1, 2, maybe 3 weeks of increases before we get something like we saw over here, where we pull back down to the downside. So we'll see if it's just one coming into next week. Let's take a look now at the intermediate, or back to the intermediate view, and look at the 3 green arrows. Obviously, we have 3 green arrows. So combined with that market forecast on the daily chart, it looks great. On a weekly chart, again, 3 green arrows still there too, but no green line. Remember, so it's that combination that works very well together, even on this chart, and we're not getting that, and we didn't get it over here either. So it's definitely something to keep an eye on in terms of how much strength this has left to go. Right? This has been pricing in an event that happened yesterday. Right? That market's been looking. As soon as the Fed came out in December, it wasn't a week later that the odds of a rate hike for any rate hikes pretty much went to 0. So the market's already been pricing in this announcement from the Fed yesterday of no more rate hikes in 2019. They already had been pricing that in pretty much since the end of the year, and they got it. So it's just going to be a buy the rumor and then eventually sell the news. You still have that trade deal that's out there, and that's still a lot of buying the rumor into that. And of course, the pain trade, still a lot of cash on the sidelines, according to different sources I've been seeing on Twitter. And so, again, pain trade is the fear of missing out trade, right? Continuing to push things higher. Now, before we look at the intraday chart, I did want to look at the Russell 2000. Remember, it's lagging, and see how it's got 3 green arrows too, but it's definitely got a bearish trend on that. And then the other thing I want to look at on the market forecast, the same thing for the Russell 2000, but on the weekly chart. And the same thing here, right? We actually don't have dark green shading anymore because the intermediate line is turning down this week. We haven't overcome that one down week like we did on the S&P. And you also still have a falling moving average. And then finally, the Dow Jones Industrial Average, that does have. But you can see how similar to the Russell, it's unable to get above, and its intermediate line is close to rolling over. So we're not, this isn't strong. I mean, yeah, we've got some strength in the NASDAQ composite, especially QQQ, the NASDAQ 100. That's where a lot of the strength is right now in the markets. And we've recovered this line, this trend line that we had is now, we've pretty much gotten up to it. Is this where we end up stalling now because we're hitting that as resistance? Key question to watch to see if we get any weakness heading into next week and the week beyond, the week after that, to see if we end up getting, see, we don't have the green line there either, like the S&P 500, dark green shading but no green line there. So again, we can pull down to that moving average and test that after this golden cross and then bounce, right? And that would be perfectly normal for something like that to occur. You can see today's range is quite the big range today. Again, a bullish move usually doesn't have big ranges, right? But this one, a little bit of a breakout, and it did, and we had about almost 5-point move from low when we gapped down all the way up to the high at the end of the day. So bullish candle, higher low, higher high, new 4-week high point. In fact, the 4-week range now is getting close to that 5% mark, which is a high for the bullish moves, right? So 272 divided by 285.18, so we're just about 4.5% now of the high, the 5% of the high point. That's a pretty decent sized move for a bullish rate. That's a pretty decent sized range for a bullish move, right? The bear, when we extend to the downside, then 10% is the mark. As wide as that range gets to the downside of the high, and obviously we're not going down, we're going up. So we're going to kind of watch that 5% mark to see, if we do get to that level, and if it stays there. So that being said, if you take a look at the day, the range and the volume today. The volume was just 79 million, just about average. The range, obviously, 4.5 points, 4.6 points. That's not extreme. 4.6 is right in here, but it's actually kind of in the bearish territory. So we don't want too many more days like this because they won't all be up, right? If we get more days like this, there'll be ups and then downs, right? So we want the ranges to start slowing down again like this, right? These are the bullish days that you typically get. And the volume at 79 million wasn't very high either. So that's a good sign. And you can see that, but you can see kind of the range is starting to turn up a little bit. So hopefully it's not, again, when it goes up, it doesn't go up during declines, right? Or during rises, it goes up during declines. So we want to make sure that that's not the case. So we'll kind of keep our eyes on that to see if that turns into something more bearish, or if it really starts slowing down as we head into, like I said, the next layer of resistance, which is right there at that 290 area according to the volume. That's not as strong a resistance. We got not a lot of support to the downside, so any kind of pullback we may ever get won't be very significant because there's a lot of support below where we're at. So that's a good sign actually for the markets. And you can see as we rally higher, if we were to clear this 290 area, then it's kind of free sailing going from there. And you can see, from a long-term perspective, I didn't show you this on this chart, but if you look at the trend strength indicators, we do now have a weak bullish trend. Remember, it takes into account long-term, so this isn't just like the last so many weeks. Obviously, the daily chart shows very strong trend, right? That's a much different story. The weekly chart's a longer term view, and it's just now crossing above 1 and just now crossing above 50. So we'll see, what that turns into, because again, the next step to get a moderate trend, you need to get above 2 and then above 65 on the trend noise balance to get out of the noisy area. This is the noisy area. This is the trending area up above. So positive sign there, and you can see also too from a long-term MACD and stochastics. Of course, we're still above 0 here we're still above 0 on that, but if you take a look at the long-term MACD, we are also above 0, and now that the 17-week moving average is close to crossing above. So a good sign there, but you can also see, we're kind of getting a series of lower highs, and we got a higher high, and there's your divergence, and now, we're still not eclipsing those old high points yet. And finally, the DMI, which is showing a strong trend on the daily chart, just like everything else. Strong trend. Again, look at the weekly chart, and you can see you don't have that strong trend yet. We don't have that positive line up above 25 with a negative line down below 20. In fact, they're kind of crisscrossing over the last so many weeks. So another week or two might get that, right? And you can see we actually got that here, only to have it finally turn over. So that's something we'll keep an eye on too. That, on a long-term basis, we're still not quite there to where we're saying, okay, now we're going to be months of this bullish trend. It's been a nice good run to get off of that low, but it was a steep low point. And like I said, said before, we're actually we're still actually flat from that January peak. So our returns for a year plus are still actually negative. We finished that week at 28.72. We're at 28.54. So so we're still not back to where, okay, away we go. But at least we're not, we don't have the negative return. Now we've overcome all those negative returns from that peak, and not quite from that peak, but from that peak, and that's not always the case, right? The Russell 2000 is even weaker, so it went up to a higher high relative to that January peak, but we're also still not above that January peak either. So we've still got some work to do before we say, okay, now we can just kind of like ride the grind higher. But we're getting a lot closer, and we might get some weakness or pullback before we get to that point, and that's kind of what we'll be watching for over the next so many weeks. All right, so what do you think? With that at Market Outlook, do you agree or disagree with that? There's a link popping out in the top right corner of your screen. Click on that link. It opens up a poll. Then hit either agree or disagree. Vote for either one of those. If you click on disagree, scroll down to the bottom. Let me know what you're seeing. But I definitely want to hear what you have to say. And of course, remember, you can always open up a new thread, share anything that you're seeing, or question or comment anything maybe that we didn't talk about in that Market Outlook forum. Remember, the link's right above the video in that blog post. All right, now let's take a look at what's driving the price action for today. And you can see this is actually the last 2 days. And here's the Fed meeting, obviously, right here. Since then, look at long-term bonds. They rallied and they've held their gains. Crude oil also kind of been fluctuating. Obviously had some rally beforehand, and on the other end, small cap stocks really were weak, and then they strength. But you notice, all the strength that we've gotten today was not accompanied by the strength in small cap stocks. Small cap stocks started strong off of that low point, but then with large caps finishing the day strong, small caps lagging behind. So you're not the most bullish like risk on rotation here that you're seeing. Pretty much everything else is flat. Emerging markets flat, developed markets flat. Of course, they all have their issues, right? The dollar is flat. The dollar had initially dropped after the Fed, but then rallied. But now it's pulling back while the U.S. stocks rally. You can see agricultural commodities rallying. But gold is down with the dollar, also flat, slight gains. High yield debt is outperforming, but not outperforming Treasury debt. So that's, again, like I said, not the most bullish risk-on environment that we're seeing here in response to these last couple of days. So just kind of keep that eye on that rotation and see, again, when and if we might get that weakness, and see if it starts to move towards into different sectors. We did get a stronger than expected economic indicator today. In fact, the Philly Fed beat estimates 5.5 and it went up to 13.7. You can see the impact that had on the economic surprise index. Actually, it hasn't been updated yet. Still very negative here. But look at the odds for a rate hike or rate cut. We actually have gained from yesterday in the odds. In fact, that dipped briefly below 60%. So again, you kind of see like this debt market and the futures market really not buying this risk-on environment, right? This idea. In fact, if you take a look at the 10-year note, let's look at the market forecast, and this is what I tweeted out earlier today. We actually did get, at the low of the day, we actually did get another cluster. And if you look at the weekly chart on the 10-year note, we are getting back-to-back clusters. That's not typically bullish. In fact, all the other times we've gotten clusters has been when the market's been bearish. Now, it's bullish for yields. It actually is bullish for yields when we do get these clusters we've seen in the past. But the difference is the Fed was raising rates here. The rates right now are really close to where the Fed funds rate is. So unless rate hike odds start to rally higher, it's going to be hard for the 10-year note and for economic indicators to start beating estimates more consistently. It's going to be hard for the 10-year note to make its way higher. In fact, you can almost, more likely to continue this bearish trend that it's on. But knowing that in the past this has led to bounces, we definitely want to keep our eye to see if long-term bonds the yields start to bounce, which would mean obviously long-term bond prices will start to decline. Now we take a look at how the sectors are performing in that same time frame. Again, this 2-day, and there's the response, the reaction to the Fed meeting. The financial sector dropped initially after that Fed meeting and stayed weak. Everything else is bouncing up, but if you take a look at what's really outperforming, you have communication services. You have technology, and you have consumer discretionary here, along with utilities and real estate up here at the top. And of course, you also have energy with the rise in crude oil. But you have these interest rate sensitive areas really kind of pushing higher along with these cyclical areas. Remember, communication services is kind of both, right? It's got some cyclical components like Netflix, Google, Facebook, but it also has the interest rate sensitive kind of telecom area, which is kind of what it was more known for prior to the big shakeup in the sectors. So on the other end of the spectrum, financials, of course, lagging, healthcare, industrials continuing to lag, and staples kind of matching the market. Materials also lagging, at least the rest of these sectors. But these, energy and materials, kind of your dollar sensitive areas. So you got weak dollar, you have falling yields. Weak dollar, you have falling yields, and you have cyclicals, all kind of rallying here in response to the FOMC decision here in the last couple of days. All right, our trade idea of the day is in this technology sector. It's been doing so well, and you can see this stock in particular, Applied Materials, really clearing an important area, about $40, a little bit below $40, 39.5. Built up a lot of volume, getting above this upper Bollinger Band for the second time in a week. Very, very little volume because we fell so far, so fast. Very little volume to have to clear over here. So small, and our next major level of resistance is up to $50. If you take a look at its market forecast chart, Applied Materials, you can see dark green line, dark green shading. That's a good combination to have. Look at the 3 green arrows chart here, and you can see 3 green arrows, dark green line. Good volume today on today's little breakout type move as well. You can see from a long-term perspective, Applied Materials is clearing a few weeks worth of highs and getting above, and so far staying above its 200-day moving average, a positive sign after it's been so bearish for so long. Take a look at its directional movement index, the DMI. You can see we are above 25 and the negative is crossing back below 20. That's the combination we like to see. You have a rising ADX because of that, a rising trend. So good signals all across the board. If you take a look at the 2-line versions of that MACD and stochastic, the 3 green arrow chart, the MACD is above 0. We're re-engaging a bullish trend. It's got some room to run. Stochastic's in the upper half of its chart, both above their moving averages. So good trends and good opportunities for Applied Material going forward from here. And you can see even here in April, I still got opportunity to sell. 28 days out, I can still get a 30% return at the 30-34 delta. So that's a good, if you notice, if I were to analyze this trade, let's put the slice to break even on 419. Still got a high probability of success here. We'll try to get about half of that $47 gain as fast as we can and take it. If we can get it quickly, we can take it. You can see the break even pretty much would nullify to this move today and get below yesterday's low point. So an important level to kind of keep an eye on. There it is, right below yesterday. So right about, what did that be? 39 and a half, 39.53. So if you look at it here on this chart, on the intraday chart here, Applied Material, 39.53 would be back into the lower, essentially back into the lower half of the chart for us to take a what would be a small loss. Because remember, we're willing to take a $47 loss. We essentially would have to get down to 39, and that is obviously in the lower half. So we'd have to get below that low and pretty much nullify this little breakout that we've had today. It can happen, even despite all the indicators, it can happen. So, but that's, there's, according to what we're seeing on the charts, there's opportunity that we might be able to get a nice little bullish run and maybe get, again, like I said, it's a lot easier to get the first half of that $47 gain, according to the purple line, than the second half. So if we can get that half relatively quickly, we'll take it and move on and look at something else going forward from here. All right, well, that wraps us up for today. As always, now I want to hear from you. Use that link that's popping out up there, and let's go to the Market Outlook forums on MarketScholars.com. Open up any new thread, ask any question or comment you have of me on anything we talked about today or anything we didn't talk about. If you want to open up a new discussion among myself and other market scholars there. Remember, you have to subscribe to our site, but you can do that for free. Very easily on our blog page I showed you before. Thank you again. Remember to subscribe to our YouTube channel, click that thumbs up icon, and comment. Also follow us on Twitter and Facebook. Join our community on Facebook. Have a great rest of your evening, everybody. Hopefully your brackets aren't busted by the time the night's over. We'll see you all tomorrow.